People often ask me how they can figure out what a house is worth. Well, the simple answer is that any given house will sell for the highest possible price that a qualified buyer will pay and the lowest price that a seller will accept. Finding out what that number is isn't that hard. I'm Jeff Gunther, and in this video, I will share with you 3 methods that realtors, appraisers, and investors use to determine value, and I'll give you a quick description of each. First, the 3 methods are comparative market analysis, replacement cost, and an investment approach. Let's start with comparative market analysis. This is the favorite method of most realtors and makes the most sense for you if you're looking to buy or sell a family home. A realtor will simply access the MLS database to find houses like yours in your neighborhood that have recently sold, and that gives them a lot of information. They'll also look for houses like yours that are currently for sale. That's the competition. And they'll look for houses that were recently on the market but did not sell. Those might have been priced too high. Now, will they find a house exactly like yours? Probably not. But it's not too hard to make adjustments for aspects of a house that yours has or doesn't have, like comparative value of a garage or a renovated kitchen. Comparative market analysis is by far the most common method used to evaluate residential real estate. The second is the replacement cost approach. Now, replacement cost attempts to answer the question, what would it cost if I could go out and find a lot and build a house like the subject property on that lot and then depreciate it for the age of the subject property? So, cost of land plus construction minus depreciation equals replacement cost. Appraisers will use replacement cost alongside a comparative market analysis to confirm their estimate of value. As an investor, if I find a property that is listed well below replacement cost, I'm going to be interested. Which brings us to our third method, an investment approach. Now, if you're looking to buy or sell a family home, the investment approach is not for you because investors are almost always trying to find the lowest possible price. Investors use a variety of methods to figure out value, but I'll give you a quick rule of thumb that you can easily learn and experiment with. Gross Rent Multiplier, or GRM. Now, to use GRM, you're going to need to gather a little bit of information about the asset type and location that you're interested in. Find out what average sale prices are against what the average monthly rent is. Take the sales price and then divide by the rent times 12 months so that you know what the annual rent is, and you get a gross rent multiplier. So here's an example. Let's say that a house is selling for $162,000 and it rents for $1,350 or $1,350 a month. $1,350 times 12 happens to be $16,200. $162,000 divided by $16,200 gives us a nice even rent multiplier of 10. That tells me that houses like this in this area typically will sell for 10 times their annual rent. Armed with this information, I can make all kinds of quick analyses. Here's another example. Let's say that I know a place that will rent for $1,500 a month. I can take that $1,500 a month, multiply by 12, and I'll get $18,000. $18,000 times my gross rent multiplier of 10 gives me a price of $180,000. I might be willing to pay up to $180,000 for that property. Here's another example. Let's say someone is offering me a property at $192,000. Again, I can take that $192,000, divide by my GRM of 10, and get an annual rent that I'm going to need of $19,200. Well, that works out to $1,600 a month. I would need to rent that place for at least $1,600 a month in order to even consider that price. So there you have it. 3 ways to figure out what a house is worth: comparative market analysis, replacement cost, and an investment approach. Ultimately, any house is going to sell for the highest possible price that a qualified buyer will pay and the lowest price that a seller will sell. Making money is simple, but life can be hard. If you'd like to learn more about investing in real estate, please leave me a comment in the space below or subscribe to this channel so that you don't miss out on future posts. Thanks. That's it.